for Teslafaninsight. As usual, we want to thank you for taking time out of your day to join us. Our focus today is, as you know, uh, we recommended that you buy Nvidia 3 months ago, and the stock has gone from the 350s to now over $800 a share pre-market today. We also wanted to note to you that wanted to review this. We also wanted to review the fact that, as we discussed, Tesla would make a run uh, back towards and above 200, and we also wanted to review that as well. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, would like some better ideas on investing and trading, please join us on Patreon. Now, also likes and comments are greatly appreciated. So I've been slow on the updraft. One of the challenges I found with this channel is that generally positive comments, we have no issue with our supporters. Generally negative comments, if things are that's what's occurring, obviously it has the opposite impact. So today, what should be a weekly, but has turned out to be more of every couple of weeks or every 3 week situation, we sort of look at the finance side of the house relative to the stock price of Tesla, and in this case as well as the stock price of Nvidia. So one of the things you'll note is that there's a very close relationship between Nvidia and Tesla. The Fremont sort of main production facility for Tesla is within 3 miles of Nvidia's headquarters. And there's a lot of mixing of engineers in anticipation of how that technology is going to be used in current and future products by Tesla. So as you know, there's been a huge bust out in terms of what's going on with Nvidia's stock price. And they're suggesting they're going to triple revenue and earnings in the not too distant future, which has resulted in a further push on the stock price, which I think totally makes sense. Now, one of the stories I really like is there's an Indian proverb that says that there were 6 blind men holding on to different parts of the elephant, and each one knew exactly what the elephant looked like, and that the others were inaccurate in their assessment. Now, I just want to say that I really think that everything NVIDIA is doing is terrific. There are obvious and not so obvious techniques in which that will be used going forward. Clearly there's a blend of technologies here going on. There's a software side and there's a hardware side, and NVIDIA really dominates the hardware side in combination with a number of other chip makers. AMD comes to mind. On the production side, there's just a lot. If you Google NVIDIA or AMD or something like Micron, you'll see a lot of other companies to consider investing in. And so if you feel like the runaway from the current earnings number is way beyond what you're comfortable with, there are some other firms that you might want to consider if you want to participate on the whole AI boom. So part of my goal is to sort of look at, well, how is AI playing into what's really happening? And one example that came to mind for me that was totally amazing, and this is a good 4 years ago. So what happened is that there's a company called Google. And what Google did is that they have 34 different languages into which, they translate everything. Well, a buddy of mine was actually a contractor kind of in the middle management range at Google, and he had worked at Cisco Systems as well as HP prior. So one of the things he pointed out to me is that one of their main jobs was after the AI systems translated the pages to all those 34 languages, what they then decided to do was have a staff of engineers that would go through how well the AI was sort of doing translations and try to fix inaccuracies that might show up for users. So probably 6 months after he mentioned this to me, I was like, well, what happened with all of that? And he said that the degree of accuracy of the translate to those other languages had gotten so good that they didn't have to spend the money anymore on using humans to do sort of translation checkups. So all of a sudden, there's a layer of people, I would say at least 34 people because you go across the number of languages, but all of a sudden, those people disappeared. So I kind of want to bring this up because one of the big discussions about why AI is so valuable is, in essence, you can train machines, and those machines can replace human beings in a lot of different roles. And I just wanted to bring up this example today because, um, they were able to slash heads and replace with equipment. The other thing that's been going on is a discussion of something called satient. So there's been a beef between the founders of Google and Elon Musk regarding the fact that can you trust the machines to operate in the best interest of the human beings? And so, how this plays out is that Elon Musk is saying that you really need to keep people around to make sure the machines kind of don't go haywire. But on the other side, the folks at Google, namely Larry Page and Sergey Brin, are really of the mind that uh, the technology is a neutral. There's no good or evil to the technology. It's simply, if you will, doing its job. So it's kind of interesting right now because, nearby where they both exist, one of the big things going on right now is the shutdown of uh, the Chev or the GM um, uh, automated vehicles because there was a situation where a woman was hit. She was in the middle of the street. Um, the automated vehicle went by, ended up dragging her for an extended period, adding to the injuries she already had. So one argument you could make is, hey, the technology is great, AI is great, everything's great, but there's an interaction between human beings and uh, technology that's gone on here that turned out not to be very healthy, and this makes a lot of people nervous. So what I wanted to review today is the fact that number one, I think the AI stuff is excellent. Number two, clearly Nvidia is one of the leaders, top three in the field. And obviously their stock price reflects that. Their revenue and earnings is reflecting that. I also wanted to note that one of the many companies benefiting from revenue in terms of the attachment of the hardware to the software and then delivering products is Microsoft. As you know, their stock price has gone bananas as well, and I think it will continue to do so. So in general, I do think it's still a good buy. I'm expecting at least another, 20 to 50% upside in the next 6 months for Nvidia, but who knows, that number could go bigger because when they're talking about tripling revenue, it also suggests that their PE ratio is low for where it should be. So today is the second day after earnings or announcements. It's still rising. I suspect it'll cross $1,000 in the next 48 to 72 market hours, and then peter out someplace in a 1,200 range probably in the next week or two. So it might be something worth your time and energy. So my next thing is that uh, I'd like to bounce over to what's going on with Tesla. So one of the, I don't know if you guys have noticed, but there are concepts that we've introduced on this show about investing and investing in Tesla. And one of the things we haven't done is sort of walk from the past to the current to into the future. We'll kind of give you a taste of the future, but not as much as I think one could. An example of that I want to give is that let's go back 30 years, right? Maybe 35 years. What had happened was there's a transition from trust companies being the primary way in which stocks and bonds were traded within banks. And then you had full service brokers become big. And then people didn't want to pay large commissions to trade stocks. So we went from your broker getting a fee for trading the stocks you want to, that could be hundreds of dollars per trade, even though there might be a large number of units traded, to all of a sudden it's pennies. And so the brokers kind of changed their fee structure from being, okay, we'll just charge you per, per share, if you will, traded, to, okay, we'll just charge you a 1 or 2 or 3% per year of the size of your portfolio to manage it, because all the revenue related to all the trading had disappeared. So we keep stepping forward in this process of, well, what is the future going to look like? Now, I recommend that if you're an investor, even if it's Tesla, I highly recommend you consider looking at Vanguard. It's a sort of customer-owned entity. They have the lowest fees out there. It's a huge firm, and they brought in the whole concept, along with Buffett and others, where we're in the land of indexes now. So the question mark has become, well, why do you want to pay an investment manager when all that investment manager is going to do is take your money and go buy an index on S&P 500, and it's a very safe entity because you have a large number of stocks, and because everybody knows what the subject companies are within it, there's not a lot of leeway necessary to get a basically good amount of return over time. And so that's the land we're in right now. So one of the reasons why I argued, and we're seeing now, that Tesla should do fine is that we've discussed the concept of what I call the inverted sine curve. So as you know, there's something called the sine curve, which goes like that. Well, I'm arguing that if you watch Tesla's stock price, we're going for a sine curve as we head into earnings for the last 4 earnings periods. And then after we get through that, we end up getting the earnings number. We tend to have a disappointment, and then the curve flips over. And so in this case, what it's meant is that pretty much for the last 4 quarters, Tesla has gotten up into the approximately $250 a share midpoint between the last earnings and the next earnings. At this point, we're at about 200. The midpoint looks like it's going to be 210, maybe 220 if the market doesn't significantly pull back, but that's below 250. So what I'm expecting is what I described previously, which is I expect that by the middle of March, we get near 220. And then as we roll into earnings, I think there's going to be a lot of strong sentiment based on good earnings elsewhere. And then we'll get our production numbers. And then if those numbers do what we did this past quarter, we go back through the same cycle again. Part of it's driven by, there are a lot of variables driving that. Obviously, there's some parts issues and shutdowns in Germany. There's competition from BYD. There's a number of things that are impacting sales, but not dramatically hammering them. On the flip side of that, as you know, GM and others are having all kinds of problems managing their electric vehicle rollout. In particular, I'm amazed by the attitude of the buyers and the attitude of the producers. The buyer's attitude is that if you make this efficient, we have plenty of charging facilities that work, we'll do it. On the part of the sellers, they're like, we have no interest at all in getting that figured out for you. All we have to do is produce the vehicles and you guys can just charge at home and we're good to go. That obviously has not worked out, hence one of the big reasons why we're kind of stuck right now, where electric vehicles are kind of getting a, if you will, a bad rap. So as a result, I just think that we're not dropping dramatically, which is great on Tesla. We have new revenues coming from the Cybertruck. We have things happening in terms of European demand is still strong. There are things out there, but there are some challenges that have been experienced that we just noted here. So I think we stay within this, if you will, 180 to 230 range for the next couple of quarters. And you might want to hedge accordingly as we pull past 200, heading for 210, 220. Great time maybe hedge at 5 or 10 points below the peak prior to earnings, and then pick up some cash that way based on losses that you might see during the quarter is my recommendation. But we'll see how it plays out. It just so happens that that cycle has consistently played out over the last 3 quarters, and frankly, I'm expecting the same. Any rate, we have more to cover in that space, but as we get forward, we'll do more of that. So, any rate, I wanted to suggest then that the AIs of the world, the Microsofts of the world, AI, i.e., Nvidia and others, great place to have your money right now. I think Tesla is a solid place to be, and they're benefiting from the fact that they're in all the indices, and people are buying the stock while other people are running for the hills because it's part of all those indices. So expect us to keep pushing forward for Tesla going forward in the near term. And then once we see those production numbers and then can imply what the revenue was from them, we end up sort of cycling back through what we just did. But there are some benefits to Tesla being, if you will, a middle-aged company. So this is the end of our conversation on stocks, etc. We'll now move on to our health tips for the day. Just a reminder, we have our list below of 25 legless daily with a 5-pound weight ideal. Even without the 5-pound weight, it's still impactful exercise. Number 1. Number 2, I highly recommend that you consider a 20-minute walk every morning, even if you're doing workouts at the other time, because it'll consume the calories of that day with the workout. Workout time will actually get into fat stores or make you even stronger in the process, is the second one that comes to mind. And again, the rest of the list is below. If you're a health professional, we'd appreciate your sharing tips and tricks to consider that we can also add for all of our users. At any rate, once again, we want to thank you for joining us. This is Greg for Teslafaninsight. Au revoir. Tschüss. Au revoir. Lahithro. Khoda hafez. Strazuche. Ni hao ma. Namaste. Arrivederci. And in Jamaica, we say, no respect, walk good man. Thanks for joining us. Have a great day. And bye for now.